Hello, welcome to Zoonosis with Joy. I'm Joy, and today we're going to be talking about the Skinnerbox economy, cryptocurrency, and horse race gambling. I hope you enjoy this video. So, first of all, what the heck is a Skinnerbox? So, to understand that, you have to kind of go back to the mid-20th century to the school of behaviorism. Psychology had a few different schools of thought at this time, and the behaviorists, to simplify it kind of a bit here, believed that we could understand human and animal behavior by looking at it externally rather than trying to understand internal states. We can't understand the internal states of animals, you see, so we have to understand it based on their external behavior. Now, this school has largely been adopted or has faded out of kind of general psychology, but it's things that it found out through this school are very important for the way we understand things now, and it's important to recognize that. One of the leading figures in the behaviorist movement was B.F. Skinner. And B.F. Skinner was one of the leading people who helped find the operant conditioning. And the Skinnerbox is what we call an operant conditioning chamber. When you think about conditioning, we think about classical conditioning, Pavlovian conditioning. Pavlov's dogs basically were an experiment that Pavlov designed where you ring a bell and you give the dog a treat. You ring the bell enough times and you repeat this process that the dog will associate the ringing of the bell with a treat and they will salivate. So there is kind of this conditioning that happens. That's classical conditioning. In Skinnerian, or operant conditioning as it's now called, we do a similar sort of process. So we can train an animal using positive or negative reinforcement to do a behavior repeatedly by giving a reward. So this is kind of classic clicker training. If you have a dog or a cat or any other animal that you're using clicker training, you basically present, you get the animal to do a behavior or have the animal observe the animal doing behavior. You give them a reward and you pair that with a positive stimulus, usually a click with a clicker. And you do this enough times that the animal will associate the clicker with the reward, and you can use this to shape their behavior. So, how does this apply to the Skinnerbox, and what is the Skinnerbox? So the operant conditioning chamber is basically a box that uses this principle of operant conditioning on rats, mice, and other animals, as we will see. So in the operant conditioning chamber, you have a rat, and you have a little lever or a button that they're supposed to push, and then every time they push the button, or at least for the first few times, you give them a reward. So the rat or mouse, they figure out that, if I push the button, I'm going to get a reward, at least some of the time. Now, you would think that the best way to train them to do this is that every time they push the button, they get the reward. That's not actually the case. It turns out, if you really want the rat to push the button, you actually change up the reward schedule and the reward amount. So instead of every time they push, every kind of random time they push. So they have to push it 500 times, maybe 2 times, maybe 3 times, And, based on some random schedule that they can't perceive, they have to keep pushing the button in order to get a reward. And every time they push the reward, the fraction of the reward can change. So let's say they push the button 5 times, they get 1 treat. Next time they push the button 3 times, they get 10 treats. So you can see, if you change up the amount of the reward and the schedule of the reward, it could actually trigger a state where the rat keeps pushing the button forever, basically waiting to get treats. And this is the principle behind a lot of gambling. It's also the principle behind social media and the doom scrolling feeds. So every time you pull down and you scroll up and you kind of do the scrolling, you're basically doing the same thing as an operant conditioning chamber, Skinnerbox, right? You don't know if you're going to get something good, and you don't know how good it will be, but if you keep scrolling, eventually you'll get to something good. Same thing with the grannies that are, at Vegas, pulling the slot machines. The longer they do that, eventually they're going to win some reward. And they may even hit the jackpot. And they'll do this until they're out of tokens, until they're out of money even. So this is a really powerful form of behavior shaping. What does that have to do with cryptocurrency and horse race gambling? Well, let's talk about horse racing. So horse racing and gambling kind of go hand in hand. They're Mike and Ike. And as long as there's been horse racing, there's been gambling. And pretty much as long as there's been horses, there's been horse racing. So you do the math. They've had horse race gambling back in ancient Rome. And certainly, in other cultures, they've had horse race gambling. But what we're talking about today is the modern tradition of horse racing, especially thoroughbred horse racing, standardbred horse racing, and quarter horse racing as well. But the tradition of that kind of goes back to the Stuart monarchy, as well as a little bit of the Tudor monarchy as well, back in the 17th century. So that tradition got exported from the UK into America, and that's what helped spur its development in many ways. With these traditions of horse racing became a tradition of gambling. This gambling cross-cultural and economic lines. So you had people from the nobility, you had people from the gentry, and you had people from the commoner class, all gambling on the same races. This became a social activity where men kind of gathered around and they would bet on the pony races, basically. And this became one of the most enduring and really transformative experiences in sports history as well as gambling history. You have to imagine that before horse racing, there wasn't really any public sports spectating, and it was with horse racing that modern sports really began. Now, as of late, horse racing has kind of fallen out of favor in terms of other sports. I mean, there's baseball, there's basketball, hockey, football, you name it, right? But especially in the 18th, 19th, and even early 20th centuries, these sports were huge. So sports gambling is kind of its own field, and I should admit I'm not a lawyer, I'm a veterinarian, so if I get anything wrong, forgive me, don't use this for any sort of legal advice, obviously. But there was a lot of concern in the early 20th century, social reformers worried about the effects of sports gambling on society. And this really came up with the 1919 World Series in baseball with the, they call it the Black Sox conspiracy or scandal or whatever. And basically the whole World Series was rigged, and that made it, that was a huge concern because it was rigged in favor for sports gambling reasons. Now, there were local sort of laws before this. One of them was made so that they could no longer have, the venue could no longer put odds on horse racing. They got around this by doing pool betting instead, where everyone puts money into the pool, there's no fixed odds, and you get a payout based on which horse, wins places or shows. So, there was a little bit of the thing going on there, but it was really with that there was a lot more pressure, and people start to see sports gambling as more of a public vice that needed to be controlled. Now, into the mid-20th century, there started to become more laws in place, especially in the United States, but elsewhere as well, to prevent the spread of sports gambling. One of them was the Wire Act, and the Wire Act basically prohibited the wiring of money for sports gambling across state lines. So you could bet at the place, but you couldn't, if you were living in New York, you couldn't bet on the horse races in Kentucky, for instance. Now, there was also, in the 90s, under the Clinton administration, there was PAPSA, which is professional, whatever. I'll put the full name in here because I can't remember off the top of the head. Remember, I'm not a lawyer. But the PAPSA, basically, what it said was that it banned sports gambling, except in very few places where it was already still existing. So Las Vegas, Atlantic City, a few other places as well. And this really put a cap on the kind of gambling that was going on, and it actually was a huge problem for the racing industries in general. So not just horse racing, but greyhound racing, but other kinds of sports betting as well. That got repealed in 2018 by the Supreme Court, and ever since then, sports gambling has had a renaissance in the United States, and this has caused a lot of different things to happen. This is where we get into cryptocurrency. Now, ever since the FTX stock collapse, cryptocurrency, you would think that it would lose a lot of steam and momentum. Now, cryptocurrencies, they're not backed by any sort of government, so they're extremely volatile markets, and as the FTX collapse has shown us, that these cryptocurrencies are extremely wibbly-wobbly, they're high-risk investments, not unlike gambling. And there's actually a huge connection between cryptocurrency and gambling because you see people are starting to use cryptocurrency for gambling. Now, this is against the letter of the law, as I understand it, for the Wire Act. However, people are not gambling necessarily in the United States. They're using websites that are based outside of the United States and some of these gambling shelters, basically, and using sports betting there, using cryptocurrency directly to gamble on things. They could also potentially do this legally using a third-party partner basically. So they would use their gambling, use their cryptocurrencies, and then use that to transfer over to a third-party exchange. The exchange could then place bets on their behalf, and they could get around the Wire Act that way, potentially legally. Now, I'm a little fuzzy on the actual legality here of this. It seems like that in one of the papers I read that would actually be legal, but doing it necessarily outside of the country in these shelters, it's probably illegal to some extent. I'm not so concerned about that aspect. I'm more concerned about the actual behavioral thing going on here. This actually has had, this is something that may actually have some actual economic impacts on the sports racing and horse racing in general. So horse racing seems to have gone on the decline, of course, with PAPSA, but also with just general societal changes in terms of how we view animals and how we view sports. There are other sports now that are very exciting. Horse racing seems antiquated. People have lost interest. And this would be the general trend. However, ever since the pandemic and the knock-on effects of that and the repeal of PAPSA, horse racing has kind of started to tick back up again, right? So we're starting to see that horse racing is coming back, and there's actually bigger purses, prize-winning purses now, and more gambling revenues now than there have been in like 20 years. So there's actually been a huge increase in some of these things. And I think a lot of that actually has to do with cryptocurrency. Now, both sports betting and cryptocurrency, they target the same demographic of young men with high risk profiles, right? So these are the kinds of men who, they are high risk investors. They want to have high risk, high reward. And this is the exact same thing that is the Skinnerbox thing, right? You're going to press the button many, many, many times, and with the hopes of getting the jackpot, getting the big bucks, These are the kind of people that are still investing in cryptocurrency despite knowing that it's incredibly shaky, incredibly volatile, and they may lose a lot of money on it in the hopes that, maybe they'll make it big. And it's the same thing with horse racing. So it's not just simply the risk profile similar. I think the actual mechanics of betting are very similar as well, because there's not a lot of overlap between cryptocurrency and other forms of gambling. I mean, maybe a little bit, but the kinds of gambling are very similar between cryptocurrency and horse racing. You have to imagine that horse racing is a social activity. It's not like playing cards or going to the slot machine. Cards are very kind of secretive. You may be doing it with strangers. You may not be talking very much. And of course, slot machines or VLTs, that's a pretty private sort of thing. You're just kind of doing that on your own. Horse racing, you're talking with other people around there. You're interacting socially, and this might be a way for young men to actually access social kinship networks that they wouldn't otherwise have access to. Also cross class lines, as I mentioned. We still have class in our society, and the only way you can really move up is if you start making friends, or if you marry into higher classes, or if you make it rich at the pony tracks and you can invest it in some other sort of things. So there seems to be a big aspect of this that's social. And that seems to be the same way that cryptocurrency has as well. Cryptocurrency is a very, it's kind of a hodgepodge online sort of community. Young men are going there, they're finding social places that they wouldn't otherwise get. And so both horse racing and cryptocurrency are both filling the same social needs. So there's actually quite a lot of overlap there. And the kinds of investments these are, I mean, if you want to call gambling an investment, they seem to operate on a very similar sort of level. It's not something that's a low sort of, I don't want to say low intelligence, but it's a very sort of high information sort of space ecosystem that you're doing, right? Because you have to look at the pony book, you have to know who's racing, and you have to kind of know generally which horses you think are going to win based on many, many, many different variables. And it's similar for cryptocurrency. You don't know if the market's going to be going up or going down, and you really have to be quite careful about what sort of things you're betting on. And this kind of investment encourages a kind of savvy sort of investor who really has to know what they're doing. Otherwise, they're just going to blow their money on bad horses or bad crypto. So there's a lot of things going on there. So there's a similar sort of demographic, similar reasons, and there seems to be a ecosystem where they're both feeding off of each other, where horse racing is benefiting from cryptocurrency, and you know, cryptocurrency is bringing in a new generation of people into this kind of high risk sort of gambling investing. And, you know, that would be the end of it. I would say, you know, yeah, they're very similar. So what? So what is that gambling is not good for you in terms of mental health reasons, right? If you think about it, I mean, there's actually been studies that show that anxiety and depression are higher in, you know, compulsive sports gamblers than they are in the average population. And the same seems to be true of cryptocurrency, and it's doubly true for people who are into both. So if you're not gambling or you're not trading crypto, these people, they feel a really bad sense of malaise and they feel terrible. So when they're not doing these things, it fills a kind of need and it becomes its own problem. And unlike social media where you're doom scrolling for hours and hours and hours and not sleeping, you're actually losing money on many of these transactions. This could be a huge hole in your wallet. So it's not just simply, hey, this is bad for your mental health. It's probably bad for financial health of a lot of the people investing in these things as well, right? So young men who want to make it big, want to make it rich, want to access social networks, they want to be successful, they're ending up putting themselves even further behind, right? They're losing all their hard-earned money on crypto, on horse racing, that sort of thing. It's a predatory sort of business. And this is why I call it the Skinnerbox economy. It's taking these young men who want to make it big, taking their money and making them more depressed, more anxious, so that a elite of wealthy billionaires, primarily, are taking their money and, you know, investing it in other things that they can use. They don't gamble. They don't need to. They've got they own the tracks. They own the crypto. They own the market, right? So it seems like this kind of economy is really based on this operant conditioning that was first, you know, shown by Skinner. And we have a lot to learn about that still. But it raises the question of where do we go from here? I mean, obviously you can't just ban gambling because people will still gamble, right? That's not addressing the problem. That's just trying to curtail its symptoms, basically. Well, I mean, the thing is that there is a social need for spaces for men and for women and for people of all genders. There's a social need for that. There's also a need that people like gaming. They like to have these high-risk sort of investments, but there's got to be guardrails. There's got to be places where we say, okay, your maximum bet can only be this, and you can't bet anymore, right? We should have some access to these sort of things, or we should have some sort of, you know, some sort of way of stopping people from going way too in debt or, you know, gaming too much, right? There's got to be some sort of way we can do this. I'm not an expert on this subject. I know a lot about horses, and I know a lot about all little things, basically, but I think it's important to know that these are mutually sort of reinforcing economies and that they should be addressed. And really, that's all I have for today. Thank you so much for watching, and I'm probably going to be posting more videos about horses and horse racing soon. But I'm kind of eclectic, as you can tell on this channel, so it'll be about a little bit about everything, Animals Health Society. Thank you, and have a good day. Peace.